Hello and welcome to the Trading Zone. I'm Joe Tigay of Equity Armor Investments. It's great to be here with you today. Hope everyone had a great weekend and is having a great start to the trading day. A little negative, getting some rotation again. Interesting to see that happen, but just thanks everyone for joining in. Brian won't be with us today, but he'll be back next week. And I got a really great show to share with you today. So, hang in there. I think you're going to really like it. By the way, if you're watching this later, I come on every Monday at 1 Eastern. You're welcome to join us live. You're welcome to watch us later. Leave me a comment below. That's great too. If you're here now, I'm here for your comments. I'm here for your questions. Happy to answer them as they come in. That is what we're doing here. Again, I hope everyone is having a good start to the week. We got volatility higher. We got the market having a rotation. A little bit of a risk off rotation. Remember, we got semis down, tech down, value and small caps higher. This was the rotation that led up to the sell-off at the end of the month, the start of August. So little caution here. This is a warning. If this continues, if this gets worse, this could be something. And by the way, we're talking about this all show today is after Nvidia. I think this will be something that'll be front and center. Was this little rotation a sign that Nvidia was going to miss, or it was just all part of the consolidation and we're about to go higher? But I need Nvidia to lead the way. I need Nvidia's earnings, and I am really looking forward to that event. I hope you all are too. Again, thanks for joining in. I'm Joe Tigay. Let's jump into the show without further ado. This is the Trading Zone. We got Nvidia earnings. Of course, we're talking about this. They're minting millionaire after millionaire in their company, and the pay package has been so fantastic. Nobody wants to leave, in spite of the fact that they are really pushing their employees super hard. We also had Jackson Hole. I'm going to be talking about this in detail a little bit later. Jackson Hole last week, Powell basically saying it doesn't matter if inflation is coming or not. I'm going to be cutting rates, and market really liked that pivot for sure. I'll bring back a couple of times when this happened in the past, and we'll decide which one this year reminds us of. I think history does not repeat itself. It does rhyme. This year will be different than it's not going to copy either of their two. It will be something unique, but I think we got two paths we can go on, and it'll be interesting to see how it plays out for me. Again, not to beat a dead horse, it's going to be really important for Nvidia to keep this AI momentum going here. Key week events going forward. We got hold on. This is wrong. This is broken. There we go. We got Nvidia this week. Those are the key events of the week. We got Nvidia earnings, and that is the big events of the week. We always talk about the skew. This is really crucial for our modeling and how we look at volatility. I encourage you guys to all follow this along with us too. And this is showing volatility, like we talked about last week, came down so quickly. We're holding in there still, kind of at an important level. I brought up last week this area in here, this box here. It's really interesting to see how quickly we got all the way back down, into this box here. I think it would be a different regime if the volatility does come up here in this area. So that'll be something I'll be watching for as we go on. And hold on, we got a question. Thank you guys for the questions. Remember to punch them in as they come along. And questions coming in. How is the current environment affecting your opinion of the Nvidia trade, and how are the Nvidia earnings going to affect next quarter? I'm going to get into this. Yes, thanks for this question. I had an Nvidia trade on last week. Not a lot has changed on that. I'm going to get into that later in the show. But I think the Nvidia earnings I'm going to talk about really soon. It's going to be very impactful on the rest of the year in terms of the direction of the market. And it's really crucial that the economy is strong. It's really crucial that the biggest companies in the S&P 500 are expanding their earnings, or else the stock market will not be going higher. We do have PE ratio is on the higher end of the range. So it's really important for the most important stock in the S&P 500 to continue that upward momentum. So yeah, we'll be focusing in on that as we go along. So yes, bring this back to the volatility here. We got looks like we can be trending a little bit higher. It's a little shorter term. This is just 2 years. You can see this massive spike. We're still kind of, it seems like, if you take out this section here, it still kind of seems like we're trending lower. I think being below this area is still significant for me. I think if it gets above here, I think this, it kind of looks like it wants to. We're at a really important spot here. We'll see how the earnings go for Nvidia. I think we might be back into a choppy area for market volatility, really short-term here volatility. Maybe this is setting up a little bit of a, this is too hard. This is too granular to say. We got, that's hard. That's hard to say. Another question coming in here, coming in from Kyle. Thank you. Happy Mondays. Thoughts on the Fed rate cut coming up? Yes, I indeed do have a lot of thoughts on that. Something we've been talking about, looking forward to all year long, the Fed cutting rates. Now, I'm probably not going to be the first person you've heard say this, but when the Fed cuts rates, it's bad for the stock market because usually they cut rates into a negative economy. This is interesting, though. I got a couple of options for you, a couple of times that they've done this previously. And again, this comes back down to the Nvidia earnings, but yes, this Fed cut is going to be impactful because, we're either in a situation where the economy is weakening and the Fed's cutting rates, and that's actually not going to be good for stocks because stocks like a strong economy, or the economy is holding in there, not so soft, and the Fed's cutting rates. And wow, stocks can really take off in the short term when that happens. Real quickly, I just want to pump in the VIX futures term structure. I always look at this. We've moved forward a month now, so we have September is here. October now is the second month, where October was here a month, last week we had October here. So October, a little bit higher still. But yes, volatility is expecting to increase around the election and then come back down after the election. So we're still in for a bumpy ride over the next 2 months. We should be bracing for it, just expecting it. And just enjoy the ride. Finally, before I come back into our big story, I know we're really anxious about that. I'm really anxious to talk about it. NVIDIA. Let's look at this S&P 500 2-year trends. This is something I've been following. If you're paying attention, if you're new to the show, this is something I bring up every week. But this trend line is something I've been following all year long. And how beautifully the S&P 500 has matched this trend line. We had an upward trend line. We had advanced it into an accelerated upward trend line. And we had a breakdown below that, but it turned extremely quickly back up and into this channel. So we're back in this channel. And wow, this could be exciting. I think we could see, a challenge this upward area because we had this bear trap. People expected, the Fed's going to cut, stocks are going to collapse immediately, and then people piled in short perhaps, and wow, the market rallied right in the face of that, and there's potential upward momentum because we're back in this channel. I think this channel has held again, so we'll see. It could be a really good sign post earnings that we might be challenging the higher end of this channel. This would mean all-time highs in the S&P 500, and the NASDAQ obviously will follow too. So really exciting spot for this. Now, that said, if we break down below here, maybe we'll be looking at, some sideways action to a double top here. That is unfortunately what we'll be looking at if we are breaking out below this channel. So it's something to keep in mind as we go on the rest of the year. It looks really good right now, but just watching it as we go. Now, I wanted to talk about, we've been talking about a while, but I wanted to talk about the rate cuts, the coming rate cuts. We had this question earlier. Now, not skipping the 2017 rate cuts, going back to 2007. wanted to look at what happened when the Fed cut rates. So 2007, in September, the Fed cut rates, and it was viewed positively for a short period of time, and then we completely rolled over 2007. So is that what's going to happen? Is that what we're looking at now? That's certainly possible. It looks like the jobs market is weakening. It looks like the economy is softening. This looks like the Fed's trying their best to help the jobs market out. But, unforeseen events occurring right here where, oh my gosh, we got Lehman Brothers, we got a whole bunch of issues coming down the road. The Fed can't really predict. There's some black swans, and that tends to happen when you hit recessions. Things break, which you don't expect breaking, but are more likely to break, of course, when the economy is worsening. So that's one potential outcome here. This 2007 outcome, which we know led to a very, very steep bear market. But if you go back another rate cut, you go back to 1998. So we had the Russian debt crisis. We had the Fed kind of panicking. What do we do here? Well, September, after Jackson Hole, the Fed cut rates in 1998. Now the market was soaring higher. Was there really a need to cut rates so close to all-time highs? I mean, I guess that's another parallel to right now. Market's so close to all-time highs, we really need to cut rates. Well, the Fed did it anyways. And boy, we had some, I guess you would call irrational exuberance following after that, where the market just kept on climbing higher, ultimately leading to the bubble of 2000. So similarities to then and now. Of course, we have the .com then, the AI now. For me, it's really going to come down to the economy. So obviously we know right now, where do we look like versus those two years? We had this of course is the 2007 path. We're closely following the 1998 path a lot more when it comes to stock market returns. Of course, that is associated with the bubble AI, the bubble.com. But what's it going to boil down to me is the economy. And actually, let's look at the jobs path. And boy, this is a lot different. We're actually in the worst situation. I know we started from a very low level at the start of the year, but the jobs losses are worse this year than either of those two instances, and kind of accelerating the wrong way. Is it certainly possible that was just a bad number in July and August is going to come back like this? Yes, that's certainly possible. We'll wait and see how that happens. So, and you did kind of see a similar path here in 98 where you had a little spike up and went back down after the rate cut. So I think that's what the Fed's really hoping for. That is the soft landing that is possible. And I'm open to that possibility. So I think we could realistically see either path here. We could either see, both of these are on the table for me. So I'm open to both. I'll wait and see how it plays out. Back to the Nvidia earnings, I think that's going to be the biggest clue we're going to have for a while. So Nvidia earnings are really keyed into how strong the economy is, really keyed into the demand for the AI. Is the momentum continuing here? And they just continue to beat quarter after quarter. We're still in this ramp up phase of Nvidia. We had Google's CEO out there saying that the fair value price for Nvidia is about $350, just because everybody needs to buy these AI machines. Everybody needs to have these data centers processing all of everything that needs to be processed in order for AI to work. So that is on the table. That is just fascinating to see. But we've just had so much so fast. We saw this 3,000% growth in a 5-year span for Nvidia. So it's just been phenomenal. Can it possibly continue? I'm open to it continuing. I think recent history suggests that it can, but obviously we'll wait and see. Now, this is 2 weeks ago. Last week I had a trade on Nvidia, and it was very interesting to look at the results just a week later. Now, I was looking at the end of month options for Nvidia. End of month will, of course, include the earnings happening next week. This is what the chart looked like last week. We're looking at, maybe closing in on this all-time high area here. I think that's still very reasonable. 140 area is certainly possible. This is where we are looking at currently. Not a lot's changed. We're really consolidating it right here. I think traders are waiting for more information, which we are going to get on Wednesday. So amazingly, though, I put on the spread August 127, 140 call spread, $4.50. The Nvidia was trading at 127 when I put it on. And the spread was worth 450. Given a week later, one would expect to see some decay on that option. It has not decayed at all. There has been no decay. It is still $4.50. So I guess the skew has gone my way, or the balls have gone my way. The 140s have come lower, the 127s have come higher, whatever it is. But I have not experienced any decay on that spread. That makes me very happy, and I think I'm going to just hold it through the earnings. Last week I talked about what am I going to do if it goes higher. Now, if we were trading 135 or higher right now, I would gladly take the profits in this trade, and that might still happen tomorrow or before earnings. So I'd be happy to watch it as we go. If we're trading higher, gladly take it off for a winner right here. I'm happy to hold it. I like the consolidation given the run we saw 2 weeks ago. I like that we're holding here at this level. I think it's certainly feasible to see this consolidation turn into another run at the all-time highs. Now, that said, I don't expect this earnings to really blast through these all-time highs. We have this rotation out of the semis into some of the value. So I think there will be a lot of pressure if we get close to these all-time highs. Maybe people who were purchasers of Nvidia above 135 might find an excuse to get out for break even. Again, I think that'll be a hard area to crush through. Now, if it does, that'd be great. I'd be happy to collect the full value on my spread. So be closely watching that. I think it's going to be a very interesting report. Should be very, very fun to push through, and I think a lot of attention will be on that report for sure. And the reason why it's so important now, let's say they meet expectations and Nvidia, has a slight bounce or even a downgrade. Just meeting those expectations is going to be really good for the whole infrastructure. Remember, it's not just Nvidia in the AI, and it's not just Nvidia that's benefiting off of Nvidia. Nvidia has like a whole ecosystem of other stocks that do well when it does well, starting with Taiwan Semi and going to ASML. But it just goes on down the line. There's lots of suppliers to Nvidia. There's just going to be a ripple effect across the way. Now, the flip side is true too. Of course, if Nvidia fails to meet expectations, maybe they say, hey, the market's ahead of us on how many chips we're going to produce in 2025, for example, or the rest of the year, for example. I think the whole ecosystem will have to go down with it. So that is crucial for me. Remember, we're at a very important spot. We're going to get a rate cut coming up soon, and we are, either going to see something that looks like something that rhymes like 2007, or something that rhymes like 1998. I think both options are equally possible, and it's going to come down to the strength of the American companies and how strong the economy is. So that's why this earnings report is so good for me, or so important for me. And that is going to do it for me today. I want to thank everybody again for tuning in. It really means a lot to me that everyone's here. I really want to open it up. Any questions, happy to answer them. If you're watching this on replay, thank you for joining us too. Shoot me a line. Happy to answer any questions. If you like what you see, you want to learn more, you can always email me. You can email in on my website asking for Brian's book, Trading with Edge. A lot of great information about his and mine and Luke's time on the trading floor. I think it's an underrated book. I think a lot of people would really enjoy seeing that. And feel free to ask me a question via email if that is what you'd rather do too. That is going to do it for me. Remember to catch me every Monday, 1 Eastern. Next week will be at Tuesday because of the holiday. Every Monday, 1 Eastern, besides holidays, for the Trading Zone, presented by Mike's. I'm Joe Tigay.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.